Hey everyone, my name is Brendan, and today I want to walk you through crypto's clear path to recovery and some evidence that a bottom could already be in for Bitcoin and a lot of the other altcoins as well. I don't know why everybody isn't talking about this yet, but there is, again, some really strong evidence here that just is not being mentioned by traditional sources. So, first things first, we're going to walk through the weekly and the monthly RSIs and look at this chart that I have in front of me, which is the Bitcoin longs chart, which, as you can see and as I zoom out, this thing is far and beyond any kind of all-time high that we have ever seen in the history of Bitcoin. So we're going to come back to this later and also look at the Bitcoin short chart, but we're also going to need to take a look at Bitcoin. And this is the first thing that I want to dive into over here by moving us to a weekly time scale and looking exactly where Bitcoin is bouncing off of. Because just yesterday, or technically on this weekly candle, Bitcoin fell back to its previous all-time high, and I want to shrink this just a little bit more, but Bitcoin fell back to its previous all-time high of $20,000 before bouncing off of this same area, which makes sense because this is previous resistance now turned into support for Bitcoin. But none of this is even the most convincing evidence. I think if we want to take this a step further, we can look at something called the 200 weekly moving average. And we're going to move over to Bitstamp to more clearly see this. But every single time that Bitcoin has ever come into this area towards the 200 moving average on the weekly timescale, it has bounced consistently. We're talking the Corona crash, it bounced right off of this area. The great 2018 bear market, it still bounced off of this area. And if we want to zoom even farther back to 2017, 2016, 2015, we can also see that every time that the Bitcoin market has gotten near this 200-day moving average, it has consistently bounced off of this area. So what we're now seeing is one of two things is going to happen. Number one, we are going to continue to hold this 200 moving average, or we're going to create history for Bitcoin and break and close below this for the first time ever that's ever been observed. So if we want to zoom out, I want to bring one correlation to spotlight on Bitcoin, and that is the COVID crash that happened just about 2 years ago. And so if we can look over here on a weekly time scale, we had two candle body closings right on top of this line, but what you'll notice is the brunt of this wick that we see is below the 200-day moving average, but the candle body closings are right on top of the moving average. So I think this is significant to show that, number one, when we did pierce below this for those 2 weeks, there was an extreme amount of buying pressure that came into Bitcoin, and this was the lowest point that Bitcoin saw right before it reversed from $3,800 all the way up to over $60,000. So the last time that we even were in this area, it was evidence that the bottom was very, very close for Bitcoin. And again, following about 2 weeks below this 200 moving average was the last time that we saw Bitcoin before it went absolutely parabolic to the upside. So here we are now 2 weeks, or excuse me, not 2 weeks, 2 years later, in almost the exact same situation where we are now piercing below this area. This could be a sign that, if history is to repeat itself, this 200 moving average could hold, or on the contrary, we could be making history and closing weekly candles below this area for the first time ever. So this is going to be something that you want to keep your eye out on. On top of this, we can also see that the last time that we hit these levels on the RSI was when Bitcoin bottomed in 2018 and when it bottomed in 2020 as well, as the 2014 bear market cycle. So I'm going to move this over to the monthly RSI so that we can properly see this area. So over here we can clearly see that the last time that the monthly RSI was anywhere near a 44 was when we bottomed in 2014, when we bottomed in 2018, and on a monthly perspective, we didn't even get down to this area on the Great Corona crash. Now, all of these drops, I believe all of these drops, and I might have to fact check myself. I know that for 2018 and 2020, Bitcoin dropped over 80%. And we are now at a spot where Bitcoin's down about 65 to 70%, and we are in this same area that we bottomed for several of the previous bear markets. Not only the previous bear markets, but some of the worst bear markets that Bitcoin has ever seen in its history. So we are now entering into a familiar territory because this is historically support on the RSI, this is support on the candle chart, this is support on the moving averages. If there's somewhere where Bitcoin could be showing signs of a bottom or an area that Bitcoin could even bounce, maybe not even a bottom, maybe just an area that Bitcoin could bounce, this would be one of the most likely areas. Again, former all-time high now turned into a clear area of support that we've held over the last 2 days. So when we're looking at this, I think we have to recognize this. This has been a very common, reoccurring theme on my channel, is that former support always not always, but former support tends to turn into resistance, and former resistance tends to turn into support. And we can see that that idea is still playing through here on Bitcoin, even though this is 4 years separated from 2018 all the way up to 2022. Now, this is something that we have been talking about in Crypt Nation. So if you're part of Crypt Nation or Altcoin Alert or part of the newsletter, you already got access to all of this information because I do all my technical analysis over there first. And so if you want early access to all of this, so that you don't have to get anything that is days or weeks delayed, then head over to the link in the description down below and check out Crypt Nation, because they are a very, very useful resource, and I'm glad to be a part of them. Now, the next thing I want to highlight is almost the vice versa of this, and looking at NASDAQ, because NASDAQ has historically bounced off of this 200 weekly moving average as well. And so when we're zooming out over here, we can see that I have all of these already highlighted, but we are about, I think we're about 5%. We can measure this out once again, but we are about 5 to 6% away from this 200-day moving average on the weekly timescale for NASDAQ. So we are not quite there yet, but historically speaking, every single time since 2008, NASDAQ has bounced off of this area anytime that it has approached it. We have over here in the Great Corona crash, and then we have the 2018 crash, and then before that we have the pullback in February from 2016, more action from 2010 and 2011, and we can see that even before this crashed, we used this area as consistent support for NASDAQ. Now, the reason that I am bringing this up is because Bitcoin has about an 80 to 85% correlation to NASDAQ right now. And so the argument is that maybe it's not a matter of Bitcoin hitting the 200-day weekly moving average, but maybe it is the argument of NASDAQ hitting the 200-day weekly moving average, in which case Bitcoin could have a little bit farther down if NASDAQ has more room to move to the downside as well. So if that is the case, then maybe we see another 5 to 6% down on NASDAQ. We approach closer to this moving average, and then by the time that we get down about 5% more on NASDAQ, maybe that's another 10, maybe 15% on Bitcoin, and then that could be a sign that eventually the bottom is in. But nonetheless, there is some very strong signs that support is near. And finally, I want to talk about Bitcoin longs, because this has got to be one of the craziest things that I've seen in my crypto career so far, is seeing longs go through the roof. I mean, quite literally doubling, more than doubling. It's ridiculous. I have not seen anything like this. I mean, clearly, this is all-time highs for BTC to USD longs on Bitfinex, but this is one of the craziest things. And if we go and we look at BTC to USD shorts, we can expect that, guess what, those are really, really, really low as well. So something is brewing here, and I think it's only safe to be a little bit prepared, because at some point, markets can only go down for so long, and eventually we're going to see a very volatile bounce in the markets. Now, the Fed is going to be speaking in just a couple hours about whether they want to raise rates. And it's not a matter of if they're going to raise rates, it's a matter of how much they're going to raise rates. And so the thought here is, are they going to raise 50 basis points, 75 basis points, or 100 basis points? And the more basis points that they raise, the more the market will crash. And the less that they raise, the more chance that there is of the market having a recovery. The problem here is that if we look at something like the DXY, which represents the US dollar has been on an absolute tear. And this thing right now is inversely correlated to almost everything. We're seeing stocks, indices, precious metals, cryptocurrencies, you name it. Everything is falling, and the dollar is ironically flying despite having the highest inflation rate in the last 40 years at 8.6%. So this puts everyone in a really tough spot, and I see a lot of comments that are talking about, why is the cryptocurrency market down, as if not everything else is down. But if we look at anything else that is not the price value of the US dollar or the US dollar index, everything's down. Again, metals, indices, stocks, especially tech stocks, and even cryptos are hurting a little bit right now. So it's not like, and even some commodities. I mean, it's a wild, wild time where people are now being forced to invest in a decaying currency, being the US dollar, inflating at almost 9% a year. It's probably higher than that. So they're forced to either invest their money into a decaying currency or invest into falling assets. And so the Fed is now stuck in a very, very hard spot where they have to either raise rates to help fight inflation, or they can lower rates to help the US economy. And it's a losing battle that, in my opinion, they did to themselves by printing a lot of money. So essentially, this is a pickle. This is a pickle for everyone, where we now have to choose, or the Fed has to choose between fighting inflation or helping out the U.S. economy and fighting the U.S. economy. So this is going to be a wild ride, and this kind of volatility, I think, is really just getting started. And volatility can work one of two ways. It can always work going down. It can always work going up. I think the likelihood that we see stagnation is now significantly lower. And I would imagine that we continue to see volatility to both the up and the downside until this is all fixed, which seriously could be a little bit of time. I don't think people, there's a lot of people that seem to believe that we could go on this V-shaped recovery like we have seen previously on Bitcoin and other assets, like we saw back in 2020. But I'm not sure that it's going to be like that this time around, because the issues are a little bit more complicated than they have previously been in the past, and there's a lot more kinks to work out this time around. So anyway, it's a really, really complicated situation between different kinds of economies and fiats and different kinds of asset classes, which hopefully we can get resolved soon. But I wanted to make sure that everyone was updated and aware of exactly what is happening in this market. Now, I always like to have a news section. I know this one was more technically driven, but inside of the news, UK's digital minister has completely reiterated and said that he wants the nation to be a cryptocurrency hub. The only thing that he wants to try to avoid and dodge is the criminal aspects that come with cryptocurrency, that anyone in cryptocurrency knows that there is limited, it's a very limited amount of criminal actions that happen. I mean, if you compare the amount of criminal actions that happen between the stock market and traditional businesses, especially money that gets laundered in fiat, it's really not that far off. So again, I understand what he's saying here. He's essentially saying that he wants cryptocurrency to be a big hub or he wants the UK to be a big hub for cryptocurrency. He just wants to make sure that it's regulated in such a way so that people cannot abuse UK being a hub for crypto. What this could mean is that they put stricter laws on privacy tokens and maybe any kind of identification, so that if you do decide to pull some sort of crazy cryptocurrency scam, then that can be more easily recognized over there. On top of that, we have big news coming out about Celsius. This is another thing that we've talked a lot about already. I know that we just talked about it on Altcoin Alert yesterday, and we talked about it on Crypt Nation as well. But there's a lot of stuff happening over with Celsius right now, and essentially staked Ether, which they have, I believe they're big holders of. staked Ether has begun to lose its peg to a normal Ethereum. And so the other day we saw the biggest discrepancy in this price action of about an 8% difference between normal Ethereum and staked Ethereum. Now, if you're not familiar with staked Ethereum is, people have already begun to lock up their Ethereum for Ethereum 2.0. And if you do that, you cannot unstake that Ethereum. And so the issue here is that a lot of people have locked up their Ethereum already, and there is now a lack of liquidity because they can't unstake that Ethereum. So that's kind of where this lack of liquidity and issue originally came from, and hence why there is liquidity issues on Celsius right now, amongst other things as well. But this peg has begun to be a little bit scary for the people on staked Ethereum as well. So I think that this is a little bit of an eye-opener, that there needs to be diversification no matter where you are in cryptocurrency. But that is going to round us out. I know this is one of the longer and more action-packed videos that we've had in a while, but hopefully everyone was able to enjoy this. And if you have any questions, of course, feel free to ask those in the description down below. And if you're part of Mighty Networks and of Crypt Nation, then you can have direct access to me and the other analysts that are in Crypt Nation. So feel free to shoot me a message on there and post your threads as well. But it's going to be an exciting time, everyone. I hope you all did enjoy. I hope everyone is staying safe. This is a very, very exciting time to be in cryptocurrency. It feels like just yesterday I was making videos in 2017 and 2018 while all of this was happening, and it's a little bit of deja vu. So for the people who have stuck around for the last 4 or 5 years, welcome back to the bear market, and it's a very exciting time. So once again, thank you all for watching, and I will see you all in Friday's video.